Good evening, TradeFlare family. Welcome back to the weekly watch list where we break down what happened last week in the stock market as well as give you an idea of what we're looking at into tomorrow. So before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broad view of where we stand going into tomorrow. So the first key point I want to start off with is the outcome that we saw from the Fed meeting last week on Wednesday and Thursday. The Fed was definitely more hawkish than they had been, but they still didn't really give us a timeline for tapering, and Powell does know that he needs to be as clear as possible about the Fed's expectations in order to avoid, sending mixed messages, which could potentially crash the market like it has like back in 2013. And that's where you hear the words taper tantrum. Jerome's been pretty good at making sure that he's been very clear about the expectations that the Fed has. We saw those inflationary winners, the banks, the oil, the industrials, the building materials. Now, the Fed stance was long-term hawkish but short-term dovish. Now these inflation plays like the building materials, like the energy plays, a lot of this is about prior inflation and expectations, all turning into rapid speculation, driving up prices for oil especially, which leads me into my second point, which is oil. And a lot of the recent run-up was based on speculation for low supply combined with the inflationary argument. This was giving the oil prices and the energy plays a lot of steam, with Jerome kind of pounding it in the fact that he thinks it's still transitory, the fact that rates aren't going to be raised until 2023. The plan is still exactly what we thought it is, kind of jacking some of that speculation, causing some quick sell-off. There are plenty of other factors involved in this, but for time's sake, we'll move on to our next key point, which is, as always, our sectors. And on Friday, we closed pretty red on all of our sectors, with energy leading on the downside, with utilities, financials, and consumer staples right behind. Tech and big tech especially were the leaders, as well as consumer discretionary held up very nice. As far as the indices, the Dow was the complete lagger on Friday. And right behind was the S&P, while the NASDAQ was the leader. Notice we're seeing this rotation out of these financials, these energy plays, all of the plays that were getting a lot of steam from the inflation. A lot of growth companies are holding up nicely with the NASDAQ, so watch for this to continue. So now that we have a broader idea of what to expect, let's dive into the charts, starting off with an analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the SPY and looking at the weekly, starting off looking at candle structure, this is a bearish engulfing candle on the weekly time frame, and I do want to point out that we did break through this long-term support trend line, and we did it on a lot of volume. If I zoom into the daily here, I do want to point out that we broke through our 50-day SMA, and the fact that we failed to close above it is pretty bearish in my opinion. We've also fallen back into that range below that 418, that 416.50 level, and like we said, we could potentially target that downside at 410.50. And if we do reach that 410.50 level, I don't expect to break through that on the first touch, but rather look for a dead cat bounce at that area. And if we do consolidate lower, then I expect to keep going lower and break through that 410.50 level. Now looking at price action, I am bearish going into the next week on the S&P. To give some conviction towards my consensus, I'll also show you a couple indicators. My RSI is below that $50 mark, as well as that Chaikin money flow is below that 0 level. So this is starting to look like the beginning of a larger sell-off, but I'd rather call it a pullback, which we really haven't had this year as much. We usually see 3-5% pullbacks a year. We really haven't seen that this year. So I do definitely have a bearish neutral outlook for the upcoming week, and that is reflected in my watch list. So with that being said, let's dive into the watch list, starting off with ticker symbol BP. And this is a bearish trade idea. Looking at candle structure, you have an inverted hammer from a recent sharp downward turn, so our trend at this point would be downwards or neutral. Looking at location, it closed below that 50-day SMA on the daily. As far as the whole oil sector, it doesn't look good for them. If we keep selling off to the downside, I think we can take out these lows at $25.59 and possibly go all the way down to $24. That's where we would start to see some consolidation and a possibility for a potential break lower to start trending bearish. Next up on the watch list is Lockheed Martin, ticker symbol LMT. And looking at candle structure, again, we have an inverted hammer candle. It's beneath this support line at 380, supported by a lot of selling volume. So first target is going to be the bottom of that gap at 374.75. If we break through there, we can target the lows at 370. Then we have that 200 200-day SMA sitting around 366, 367 level. Next up on the watch list is a bullish trade idea for ChargePoint. Like I said, these growth industries have been leading, and ChargePoint was actually really strong on some really strong volume on Friday. The fact that they were only up 3% on Friday with that much volume means that there were sellers present. There just were a lot of buyers to take this thing higher. As far as candle structure, this was a bullish continuation candle, closing right above these highs around 32.60. Next, you can expect this poor structure to fill up to 35.83. We could definitely see some consolidation, especially seeing the RSI at this moment being a little bit overbought. If I'm going to be making a bullish trade this week, it's probably going to be on ChargePoint or on other growth industries like it. Next up, we have member suggestions, and first up we have Sensonic Holdings. And this looks like a play that recently shot up on some news, on some hype. It's a growth company, and it looks like it's actually holding up here at this level. We do have this inverted hammer candle on Friday showing us that buyers tried to take it higher, but they failed. So we could definitely watch for this thing to go lower, especially as it's recently ran up. So it could be a nice play to the downside at the moment. But yeah, if I was trying to go long on this thing, I'd need to see like some sort of bullish engulfing candle or some sort of pattern form out that looks like a flag or a pennant. But at this point, there's just not enough data. It looks like cash is really flowing out of it pretty quick. So we'll see if it holds up at this level. Next member suggestion is Wish, and this is another one that I've been seeing all over Twitter. And one thing I do like about it is that it's recently broken out of its long-term resistance trend lines. Right now, it's really fighting and holding that 50-day SMA. It's also some nice volume on the past few days, and that cash flow indicator is slowly creeping back up to that 0 line. If we do see the break of that $15 level with some nice volume, we could probably head up to $20, especially with all the internet hype on this one. I think this one could be a little squeezer, so definitely put Wish on your watch list. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button, and don't forget to subscribe so you can get notified when we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord. If you want to gain full access, upgrade to TradeFlare Pro for $24.99 a month. Get half off your first month using discount code TFPRO2021. And don't be mistaken, we are not financial advisors, and none of this is a recommendation. The stock market is risky, you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget the time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.